got one more presentation today. This is Henri Arslanian. He's from PwC, and he's going to be talking about hedge funds. Thank you, Henri.
Thank you, Ben. Thank you very much, guys. Very, 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 very excited to be here, guys, to present for the 4th year in a row the Crypto Hedge Fund Report. My goal over the next couple of minutes is very, very simple. It's to share with you all some of the developments that we are seeing in the crypto hedge fund space. Share with you some of the data, and hopefully whether you're a fund manager, whether you're launching a fund, whether you're a service provider, so at least you can get some of this data and hopefully be able to actually get it on this perspective and be able to be helpful to you. Our goal with this is very, very simple. The reason we launched this report, because there was a lot of demand from the community. How big is the hedge fund community? How big is the crypto hedge fund community? Are investors investing in the space? How many of the crypto hedge funds are holding Luna, for example? Important question, I'll talk about it in a second. And this is why we partner with Elwood and our friends at AMA to actually get this report together and be able to provide this to the community so that we have this data and we're all more powerful from that perspective. The way we did it, we surveyed 80 of the biggest crypto hedge funds in the market. We partnered with AMA, who surveyed over 80, again, traditional hedge funds representing over $400 billion in assets, along with PwC, and now to have this report that we have. Before we go in, though, it's important to understand this is really it's a crypto hedge fund report. It includes the crypto hedge funds, includes traditional hedge funds that are also getting into crypto, but does not include long-only funds, doesn't include those VC funds, and it obviously doesn't include the index funds as well. You guys ready for the data? Let's jump right in. The first good news is actually the industry has been growing tremendously last year. We've now surpassed $4 billion in assets in crypto hedge funds. But to put things in perspective, this is still very, very small compared to the traditional hedge fund industry. The traditional hedge fund industry today is $4 trillion. So even if you believe the crypto hedge funds will become 10% of the traditional hedge fund industry, there's still 100x growth that is coming over, potentially could take place. There's been obviously a lot of launches. Not surprisingly, the number of new launches tracks the price of crypto assets. But what's really, really interesting to watch is that really now the average crypto hedge fund AUM is almost $60 million right now, which is a big difference. It's doubled from what we have last year, but it's still quite small. The ballpark we have in the hedge fund industry is to actually break even. It's about $100 million. If you think about a 2% management fee, that makes $2 million. So again, a lot of the industry is quite small from a funds perspective. However, like many other things in the world of funds industry, the big players are getting bigger. Today, the 10 biggest crypto hedge funds control almost half of the AUM in the industry. It's obviously bringing a lot of attention, and that's one trend we expect to see to grow and to continue over the next couple of months and this year as well. Why this is happening, though? Because the majority of investors in crypto hedge funds are high net worth individuals and family offices. This is actually the exact opposite if you go to a traditional hedge fund in space, where a lot of the pensions, endowments, the sovereigns, and some of the large allocators are obviously a big chunk of the AUM you see there. And what's really interesting, though, and this, unlike traditional hedge funds, there's a lot of investors. The average hedge fund right now has over 50 different investors, with the average ticket right now being $500,000 on a median level, which is, again, one of the challenges we're having as an industry from that perspective. However, strategies as well are evolving. Today, without any doubt, the most common strategy that we have in the crypto hedge fund space is a market-neutral strategy. Not surprisingly, as volatility levels are continuing with liquidity, this is kind of one strategy that is quite interesting from that perspective. What's been really interesting to watch is performance. In 2021, crypto hedge funds performed pretty well. Actually, the winner here was discretionary long-only funds with almost over 400% performance. I mean, these are numbers you don't see in the traditional space. But obviously, you have to factor in that the market cap went up almost 200%, and Bitcoin was up 60% as well in 2021 from that perspective as well. Now, what are the funds trading? What kind of assets are these crypto hedge funds trading? Some interesting data as well. Compared to previous years, we saw obviously move away from Bitcoin. I mean, it's obviously a large percentage are trading Bitcoin, but really going more into altcoins. For example, the percentage of funds that are trading assets like XRP or even the Litecoin has remained stable, but we've seen really increased number of funds trading altcoins. Interesting data point. According to the data that we have, around 50% of crypto hedge funds were trading at least Luna. It'll be very, very interesting to see the data we have, how that's been affecting the performance of some of these funds from that perspective. Not only on the altcoin side as well, but also on the stablecoin side as well. Of course, the quasi majority of funds are trading either USDC or USD. Most of the trading pairs, as you guys know, are in those pairs. But also, about 25% of them were actually trading USD, Terra USD. We don't have data on how many of them were in the Anchor protocol, and obviously we don't have data of how they performed last month. But as I'll talk about in a minute, it's be very interesting to see as the quarterly redemptions come in at this end of this month, what's going to be the state of the industry. And we'll talk about that in a second. The other thing to watch are actually what exchanges are these funds using. Again, unlike traditional markets, what's been very interesting to see, there's a really concentration, really of the 4 big exchanges being used by over 1/3 of crypto hedge funds in the market. And what's even more interesting is how are the funds selecting them. For example, by far, the biggest criteria used by crypto hedge funds today when they're selecting these trading liquidity venues is liquidity. And if you look at the data that we have, regulation and whether these exchanges are regulated is less than 5% of the consideration level that's there. Elements like risk management rank even lower. I guarantee you the data over the next couple of years as we continue with the survey, I expect some of these elements to go up the charts, especially as there's liquidity elements change from that perspective. So very interesting data from that perspective. One of the reasons is obviously the increased usage of derivatives. You know, now over half of the funds right now are using derivatives, either for taking directional view or for hedging purposes. But also what's been very interesting to watch on the data side is how are they trading? How are the crypto hedge funds accessing this liquidity? Unlike traditional hedge funds, the vast majority of them are building their own technology. Less than 1/5 of them are actually buying outsourced OMS provider, EMS provider, order management system, execution management systems, or portfolio management systems. The majority actually are using now their own technology from that perspective. I'm ready to bet that over the next couple of years, as more vendors enter the space, this percentage should actually increase of the number of them using already solutions. Also, many of them are moving out and actually exploring some of the other options to deliver alpha and deliver returns as well. Almost half of the funds right now are involved in borrowing, staking, and lending. And what's been really, very interesting, if you look at the data, is where the staking, for example, taking place. They're using either delegated staking or using third-party providers. Not surprisingly, really less than 1/5 of them are actually running their own nodes when it comes to staking from that perspective. Very interesting data point as well. Today, almost half, 42% of crypto hedge funds are actively trading DeFi. They're accessing the DeFi exchanges, the biggest one being Uniswap from what we can see on the data side as well. So very, very interesting data. Again, this is the first year we're tracking DeFi protocols, but a really increased percentage of a lot of crypto hedge funds now accessing DeFi exchanges. Fees, this is very interesting. When you go to traditional hedge funds, fee levels are way lower than the typical traditional 2 and 20. What's interesting on a crypto hedge fund is that the fee levels have continued to maintain at a very healthy level. With obviously a median of 220, average levels being higher than that. And the reason is a couple of reasons for them. Obviously, running a crypto hedge funds has increased costs compared to traditional funds. Security, custody, how you're doing your whitelisting, how you're hiring talent, especially in cases now that the average crypto hedge fund now has more people than they did last year. And not only that, there are also more experienced crypto people as well joining a lot of the crypto hedge funds. We're seeing obviously a wave of hiring, across the board of the industry, people coming in the industry. Now, some interesting data points. Yes, the quasi majority of funds now are using independent fund administrators. Frankly, I think it'll be very difficult to raise third-party money if you don't have an independent fund admin. But what's been really interesting is seeing the rise of independent directors. Increased governance, independent governance, and in the various funds in the crypto hedge fund industry. And this is becoming very important, especially this month. Again, because such a large number of the funds have gates. What is a gate? Is increased there's a lot of investors want to redeem. these gates come in and investors are not able to redeem. There's a fund level gates, investor level gates of how the mechanism operates. But the decision of whether these are imposed is often given to these independent directors. So it's going to be very, very interesting to see what's happening at the end of the month, at the end of the second quarter, and how this is going to impact the broader crypto hedge fund industry. Another interesting data point is, again, some of the service providers that crypto hedge funds are using. But for example, while we didn't see a big increase of how many of them are using third-party research providers, it's been very interesting to see the data when it comes to independent custodians. Again, with the majority of funds right now using independent custodians, but where it becomes really interesting is there's becoming a lot of concentration, with really like 2 or 3 players really dominating the market. Really right now, you have pretty much 2 of the big custodians that custody over 40% now of the industry when it comes to crypto hedge funds on that side. The other interesting data is where are these hedge funds based? Here the data becomes very interesting as well. As a domicile, again, almost the majority of crypto hedge funds are based in the Cayman Islands. Not surprising, this is very similar in the traditional world as well. But what we're seeing is actually that when we look at where they're based, obviously there's a UK, there's a US and the UK, but really the managers are way more, let's say, dispersed around the world than what you will see in the traditional hedge fund space. It's going to be very interesting to see, because when you look at a lot of the big exchanges, a lot of big liquidity venues, most of them are not allowed to trade with US persons or US actually funds. So the fact that 1/3 of the funds are actually based in the US is very interesting from that perspective, and how they're actually able to access some of these liquidity venues legally. But that's a whole different conversation from that perspective. So a lot of interesting data, guys, on crypto hedge funds. I'll share you guys the link of the report after this. But what was really interesting is when it comes to traditional hedge funds. Like I mentioned in this report, we partnered with our friends at AMA to be able to actually survey the traditional hedge funds and how do they want to enter the crypto space. So again, we surveyed over 80 hedge funds, 89 to be precise, with over $400 billion in AUM. The majority of them having more than $1 billion in assets. And what the data shows is that the majority of these funds this year intend to either deploy more capital or keep the same levels of deployment they have in crypto. And you know, the majority of them are thinking maybe deploying less than 1% of their AUM. This may sound very little, but to put things in perspective, if it's 1% of 400 billion, that's 4 billion, that means the same amount of capital that is today in the crypto hedge fund space may come this from the traditional hedge funds in the industry. So very interesting data on what's on that side, and actually some of the appetite that we are seeing from traditional funds. Not surprisingly, some of the assets that are traded by traditional funds have the more, let's say, boring or less sexy assets, right? There's a lot of Bitcoin ETH. Some of them are playing in altcoins, but again, nothing really fancy on that perspective. And a lot of them actually are accessing these assets via futures options. A big chunk of it happens, for example, with CME cash-settled futures, for example, and other assets on that perspective. So very interesting to see even that half of them even actually are trading spot, almost 43%. So interesting data as well on that side. Now, one big topic at conference this year was regulation, regulatory clarity. And when you ask these asset allocators, these big funds, why are they not allocating right now? A big chunk of it, over half of them, is either the fact that regulations are fragmented or it's actually misguided. So this is why regulatory clarity is such an important topic for the industry, because if we're able to provide that, it actually allows more capital to enter the market, the industry. And actually the data shows, the survey shows that actually if we have that, there's definitely, according to the data, more capital entering the space. However, which often comes to a surprise to the crypto community, is some of the elements that are problematic now for traditional funds to come in are some of the boring stuff, the not sexy stuff. For example, lack of tax clarity is determined as one of the biggest obstacles we are seeing right now in the industry. Not only that, if you ask these managers what is one of the biggest challenges they have, is stuff like accounting. Something we often don't think about. We think about scalability, how we can have cross-chain operability, but actually for a lot of these funds, is how you actually value a freaking asset is a big problem that is actually often holding them back. So often this is one of the big things to watch from that perspective of how some of these challenges we're having on a practical basis. And before I let you guys go, to finish off today, it's a crypto predictions. We ask every year what is the price of Bitcoin our crypto hedge fund managers are expecting by the end of the year, on December 31st. Bitcoin is around 30K right now. The predictions according to our crypto hedge funds is Bitcoin will be between $75,000 and $100,000 by Christmas. Okay, hopefully I think many will see this. And also the last thing is also from a total market cap. Now today I think we're around the 1.3 trillion. The majority of our funds expect that it's going to go between 2 to 3 trillion. So it's still pretty bullish views. We have 5-6 months to go, so we'll see what happens there. Guys, it's all the time that I had. Thank you very much. If you want to download the report, you can get the QR code here, and it's all here. Thank you very much, everybody, and see you guys next year with the 5th edition of the report. Thank you very much.